Hi, welcome to the Market Alert for Monday, the 4th of May 2020. So, Friday, May Day, as was the 1st of May. Stocks slammed after awesome April on China threat dismissal data. I think that's alluding to the fact that Trump and I think his scientific advisor Fauci now saying that this came from a lab in China. So we'll see how that one unfolds. So let's have a look at the markets for Friday. We'll start off with the daily chart. You can see the market moving lower there below the 5-bar moving average, stopping at the 20-bar moving average. However, overnight prices have gapped lower straight to the 76% retracement that we had drew in on Friday, and the market coming back a bit there. So let's have a look at this in more detail. Friday's session, I'll just go to the pre-market session. The market was just sideways, managed to rally up to the 200 MA. Now we can see the classic retracement. I'm just going to move this over and grab the retracement tools. And from the high down to the low, you'll see the market stopping between 62 and 78 there. And then from this high to this low as well, you'll see the market stopping at 78 and the 200 MA, which is a great area to actually short from, because you've got the 78 and the 200, and you've also got the psychological level here and also the high over here. And the market then moved lower all the way down to the S1, I think it is. Let me just just drag this across all the way down to the S1, and then prices traded sideways for the rest of the session until towards the end when they closed lower. But overnight prices have gapped lower, significantly lower actually. Let's just have a look, see how big the gap is. We opened up 245 points lower, and prices have come back, and as you'll see, I may have to do this so you can actually see this and then drag it across. Prices have come back towards the gap. They haven't filled it yet, but the market tends to fill the gap, and then we'll probably go in the direction it was already going, i.e. to the downside. But you can see at the moment they've done their best here to bring the market back 3 times and then move it higher. As we look back at the daily chart, you'll see that there is some weakness around here. I'm just going to reset the chart so that you can see this. We've got a situation where prices have moved 62% off these highs. So just measure this in for you. There we go. So from this high to here, just drag this across. The market is struggling with this 62% retracement, which is also from this high to this low, coming in at the 76, 78% area as well. So you can see why prices have stumbled in this area, and now prices moving back to the downside there as well. So what I'd be looking for here is the market to bounce off between this point and this point, fail at 62, 76, 78 area, and then start to move to the downside. The market's looking weak at the moment, and the backdrop as well going forward isn't too clever either, with more and more bad economic news coming out. And also we're in that part of the season where selling might be a good risk strategy this year because of the bounce that we've actually seen. Then it's a good idea if you've been long this market to actually collect some of those profits, because statistically selling in May and going away, not that you'll be going away anywhere this year, but that's generally the consensus, that there's not a lot of activity, and probably there won't be given that most of the world are still in lockdown or locked up, whichever you prefer. And so it's a matter of having gone 60 retraced 76% of this high and 62% of here, then we could see some profit taking coming into the market. Also going forward, the economic data isn't going to be spectacular either. Meanwhile, on the implied volatility front, this also picking up a bit as well, as you can see here. So again, I want to keep an eye on this. There is some weakness coming back, and there was one other thing as well that I wanted to bring to your attention, and that is that prices are currently below the 20 bar moving average, which again indicates this weakness coming into the market as well. And I think that's about it. Let's just have a look at this week's news. Today we've got EU economic forecasts. You don't need to watch that. The answer to that one is dire. We've got German Constitutional Court ruling, I don't know on what. This is for tomorrow. ISM manufacturing for the US tomorrow. We've got the ADP non-farm employment change on Wednesday. This is looking like minus 20,000. I think that's actually minus 2 million. Minus 27 last time, but I think that looks like a 2 million. Let's have a look, see if we can get an idea on the graph there. Well, it says minus 20,000, which seems slightly odd because that was minus 27k. So, don't know. We'll see. We'll see on Wednesday. I would have thought that was millions myself, but there we go. Bank of England Thursday, and MPC bank rate votes. Don't see anything really different there. The bank rate isn't going to change either. That's still sitting at minus 0.1. And then Thursday, another 3 million job losses will take it to 33 million if that comes out as correct. And then Friday is VE day for the UK and bank holiday for the French. And non-farm payrolls are out as well. So busy week this week news-wise. Yeah. So that will do for this one. Let's see what today brings as prices attempt to move back to the upside. See whether they fail. If they do, then it's down we go, as prices will come under pressure to move lower. So from this low to this high, a couple of downside targets there just in case things turn badly. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.